The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Well, happy Tuesday morning, everybody. Excuse me there. It's a beautiful day here in Santa Fe, New Mexico. Much prettier than we appear to be having on Wall Street today. Obviously got some selling underway. The global economic and macro worries that everybody thought had gone away, well, they're back. How about that? And I was being a bit facetious there when I said that everybody thought had gone away. We've talked about that a little bit here on the show in the past. The European banks have until Thursday to approve their deal with Greece, and now it's expected that they will. But I was just watching a little bit of chatter on Bloomberg a few minutes ago. They were talking about the fact that if something goes wrong there, we could be in for some major sell-offs on Friday. Well, of course, there are always what-ifs in the market. You can hear pundits speculating all day long, so that's really nothing new. If you're watching on Tiger TV, I put up a chart there of the Russell 2000 just to kind of confirm what we already know, that I know Tom has talked about on his show, that I've been talking about, is some of this sell-off, particularly in the small caps. So you're seeing some breaks there in the Russell 2000. What I wanted to do today is take a little bit of time at the beginning of today's show just to introduce myself, maybe to those of you who have heard bits and pieces of the show, or perhaps have not really heard this at all, that you're joining us for the first time. I wanted to talk a little bit about some of my methodologies. And what I do essentially boils down to trend following, using the technicals of an investment to make buy and sell decisions. Now, when we're talking about going long in equities, for example, let's just take going long in equities as an example. That would mean buying into strength, and I know that that's counter to a lot of other investing methodologies out there. But just to give you a little bit of information about my background, where this method comes from, and I've been using this for many years with a great degree of success, and we will be rolling out a newsletter here, by the way, on TFNN, focusing on the small caps. That's scheduled to happen sometime in April. I was with Investors Business Daily for 10 years. Those of you who listen to the network, you may be familiar with Ken Shreve. He and I were colleagues back there for several years. And I was in a number of roles over at Investors Business Daily, including I led investment seminars. And the methodology over there is based on trend-following rules that were set by successful investors. Just to rattle off a few, Jesse Livermore, that's a name from the 1920s and 30s that you hear quite a bit. And then if you check on Amazon, you'll see a terrific book about him, Reminiscences of a stock operator. So that's a terrific book I recommend. Nicholas Darvis wrote a great book called How I Made $2 Million in the Stock Market. Darvas is how you pronounce his name if you want to go on Amazon and look him up. Now, that $2 million was pretty interesting because that happened in the early 1960s. I've said that a few times on the show, but just to put that in perspective. So he had Darvis was particularly interesting to me because he was not a professional investor. He was actually, of all things, a professional dancer. And he traveled the world performing. That was his job. And his method of investing was a week-old copy of Barron's that he would use to check stock prices, and he would plot them, and he developed his own stock charting system just using these old Barron's, the prices he would get in the charts there. I mean, just think about the disadvantages folks had back 50 years ago that we don't have to struggle with today. It's just amazing. So anyway, Nicholas Darvis, Jack Dreyfus, famous fund manager, is another trend follower, and many others in the past. Now, of course, currently, We have a fellow that I've interviewed before. I would like to bring him on this show sometime. His name is Michael Covell, and he's written a number of trend-following books, and he has followed the work himself of asset managers like Bill Dunn. James Revshark DePoor is another guy that I follow. I don't know if Covell's interviewed him. On the commodity side, there's a woman named Carly Garner that I've interviewed and asked her about her methodology. So a number of successful asset managers and advisors out there who are using market trends to make their entry and exit decisions. And this is the type of methodology that we will be using on this show. So that might lead to the question, where do the fundamentals fit into all of this? And that's a little bit tricky, because if you've been listening to the show, you know that I do use them, but judiciously. We as individual investors, we cannot compete with Goldman Sachs, JP Morgan, Citigroup. We just can't compete with them when it comes to their fundamental analysis staffs. They go out, they visit the companies, they have legions of people to crunch the numbers every which way. And we bring on a lot of terrific advisors and fund managers on this show who study the fundamentals and do the detailed analysis. Oh, by the way, later on in the show, in the second half, we're going to have a great advisor who runs a portfolio called Fallen Angels, and his name is Gabriel Wisdom. So Gabriel runs the portfolio of Fallen Angels, and I've known him for several years, and he's going to come on and talk about his portfolio, how he identifies these. Now, he does a little bit of a different thing than I do. He does look at some of the beaten up, undervalued stocks, and I'm all in favor of getting ideas from all the different perspectives on the market, and he's a great person to get perspective from, as are Tom and Steve and Basil and Larry and David and all the different hosts we have here on the TFNN network. Plenty of great ways to get perspective that you can weave into your own investing and analysis and trading. So in any case, we're fortunate that we have all these institutional investors who are doing the fundamental analysis for us, because a lot of these analysts have the time, the resources to get into the detail that individuals who have time pressures and really not the training in most cases really can't do. So we have a tremendous advantage here when it comes to following the stock prices, the buys and sells that the institutional managers do as a result of their fundamental analysis. So we can just follow in their footsteps. So that's what we do here. Much more emphasis on buying into strength when you're talking about going long. That's what we'll be focusing on with some of these stocks, and a little less emphasis on whether a stock seems expensive, say, when it comes to the fundamental valuation. It's always interesting to see investors arguing that they see a stock as expensive, but yet it's continuing to go up, right? And I'm talking about capital appreciation in this case, not an income strategy, though I have nothing at all against income investing. I have an income portfolio. I completely understand its place in an overall portfolio. So I'll be looking at the track record when it comes to the fundamentals. You want to see demand for the product, generally speaking, though there are some exceptions. Biotech, for example, and we'll be looking at some biotechs throughout this show. I look at those quite a bit because those are some of the smaller cap stocks showing some great price appreciation. You want to see good management, though, of course, companies can massage their earnings perfectly legally to make them look a little better than they really are. Estimates are good to check to see the level of confidence that institutional buyers have in a stock, and you can get that information on Microsoft Money, Google Finance, Yahoo even, other places. And if you want some thorough data on fundamental track records, Morningstar Premium is one good place to look. So we'll mostly be focusing here on the technical, when to buy, when to sell, buying into strength, selling on technical weakness. I believe in risk management, so we won't be discussing buy and hold trades on here. And let's see here. We'll be taking some profits. We'll talk about risk management, earnings reports, maybe taking some money off the table ahead of earnings reports. I'll be talking about that a little bit in the next segment. I want to show you a couple of stocks. And we'll be just looking at a whole lot of stock charts. In fact, let me pull up one talking about earnings, here's one that just reported. This is a stock I've been watching for a long time. Let me get this on here. It's called Acorn. AKRX is the ticker on this particular stock. Now, I'm going to put it back on a weekly. There we go. Let's see. There's our weekly chart. Okay. So you did see back there on the daily, we had a big pullback in Acorn. This is a pharmaceutical company, and this is a stock that's had a big uptrend. The market cap on this particular name is, let's see here, the market cap on this one is about $1.1 billion. It's got pretty good volume right now, almost 1.4 million shares trading a day. So pretty good volume on this. Now, this is exactly the kind of thing that I was just talking about in terms of taking some money off the table ahead of earnings. This company actually did have a good earnings report, and I believe they even increased their outlook for 2012. But nonetheless, you did see it pull back. Yeah, it issued better than expected 2012 guidance. But there was something in there the institutions didn't like, a big pullback. This is why one of the methodologies I will use is taking some or all of the profits off the table ahead of an earnings report. We're just seeing stocks of all market caps really get punished when Wall Street sees something it does not like, even in a report that beats views. So this is a good example of that, and this is one that I've been tracking for quite some time. Actually, back since, not that long ago, but back since over here in the later part of last year, when it pulled back and began to rally, got some support here at that 10-week moving average. 10-week moving average support is a huge piece of what I look at in the methodology. The buy point here would have been, I'm looking at the high price. If you're watching Tiger TV, I'm indicating the week ended December 23rd. The high price was $11.77. So when it pulled back, got support at the 10-week line, that would have given you a nice buy range. If you're a more aggressive investor, you could have come in as it got support right at that 10-week average. A little more conservative, you might have wanted to wait for it to get closer to that 11.77 mark, or even pass it by a little bit. And let's see, you did have volume down here. Let's see where it came in. Well, it was a little bit lower that week as it happened. But nonetheless, that still would have offered you some good confidence about coming into the stock, riding it higher, going with the trend, just riding it higher here ahead of earnings, and then prior to that earnings report, taking some money off the table so you avoid getting punished, exactly what happened here, and then you have those profits to put into some other stock that is showing some better technical strength at this time. So I just wanted to take a little bit of time today to explain what we're doing here. It's sometimes a little bit different than some of the other methodologies, value methodologies you might be familiar with. Stick around. We'll be back. We'll look at a couple stocks in the next segment. I'm Kate Stalter. This is the Small Cap Roundup.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks, Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the Money Game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the Money Game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, I'm Kate Stalter. This is the Small Cap Roundup. And don't forget, coming up after the next break, we'll have Gabriel Wisdom, and he's going to be on the show talking about his portfolio called Fallen Angels, which are a lot of small caps, and as he's pointed out to me in the past, used to be large caps. And he's got a different approach than the one I use. He is going to talk about more value names, but it's often, even for growth investors, growth traders like myself who prefer to buy into strength when we're going long, it's very interesting to hear the perspective from the value guys, because they are often the ones that will start those buying trends at a much lower price point and enable us to follow their action as they're buying into a stock. So it really is very instructive to hear from them, kind of let them set the path. Let me give out the phone number too. It's 877-927-6648. Please call in. I always enjoy taking your calls, hearing from you. Now, I've put up a chart of what's most definitely not a small cap, Novartis, NVS, on Tiger TV. And one of the things that I do tend to do is look at some smaller caps, often while considering the larger caps that might be in a similar sector. And Novartis, of course, let's see, it got a downgrade today, and it's tumbling on that. But this company has had some some trouble lately with some news in about products in the pipeline, just some different delays on some other products. So they've had some problems, Novartis has. So you see that where there's a bigger cap pharmaceutical that's suffering some right there. Let me show you another one that you may have heard a little bit about this today. MRK, Merck, of course. So this actually does not look so bad on a weekly chart. It's consolidating a bit right now, but let me move over on Tiger TV and we'll just take a brief look at Merck on a daily chart. You see it's reversing lower today. And again, not horrible action, but it is reversing lower. And what happened on Merck is that it issued a first quarter forecast below analyst views. And much of this, as I understand it, was due to some currency exchange rates that they anticipate not to be in their favor. Okay, we've seen some of that recently. So that's what's happening there on some of the larger cap pharmaceuticals. Now let me turn to a small cap name that I've liked in the past. I've tracked this quite a bit, and you can see why this has been one that I've liked after it cleared this consolidation. And again, coming back to what I was talking about in the first segment of the show, where a stock, I will watch a stock as it is emerging from a price consolidation, buying into strength. Now you see what happened here. This had a nice advance out of this recent pullback right here, and then it trended along, getting beautiful support right there above that 10-week average. And this is Jazz Pharmaceuticals. JAZZ is the ticker. It's a pretty memorable ticker. And now this company makes some drugs that specialize in some hard to treat or very specialized disorders, some anxiety disorders, narcolepsy, some things like that. So you do see how this has trended nicely higher here. Now, it's possible that the run-up could be running out of a little bit of steam. That does happen. In fact, you see it in stocks even like Apple, never mind even small companies like Jazz. And actually, as I'm looking at Jazz right now, this actually has traveled into mid-cap territory. This is one that did used to be a small cap. When I began tracking it, it's traveled into mid-cap territory with a market cap of about $2.8 billion. It moves about 950,000 shares a day, so some decent liquidity. It's pulling back now after a secondary offering, and you see that quite a bit when some of the existing investors or traders don't like the dilution, so they'll exit the stock when you see a secondary offering. That's usually pretty short-lived. You usually see a stock bounce back from that, and even in the selling we're seeing, let's go over to a daily chart here on Jazz just momentarily. So let's see, this is a 10-day line, so it gapped below that 10-day line. Not a great sign. You're seeing some heavy volume as that occurs. However, if it does continue to find some support at the 10-week line, that would be a good sign. If it consolidates a little bit, could offer another buy opportunity. But as I said, it's been running up for quite some time without pulling to new lows to undercut the previous consolidation. Could mean that the rally's running out of steam a little bit there, and that's something I'm always going to be looking for in some of these stocks. Okay, there's my music again. Never can believe how fast these segments go by. Stick around. Gabriel Wisdom will be bringing us his wisdom about fallen angels in the next segment.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this traders market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com. Under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
We're back with the second half of the Small Cap Roundup. My name's Kate Stalter, and we're trying to get our guest on the line here. But while we do that, there are always charts to look at. I was just, before the break, I was taking a look at Jazz Pharmaceutical, which is a small cap, just taking a look at whether or not there might be potential for this one to kind of pull back, run out of steam sometime soon. I mean, it's just had a tremendous run up. So this has been a terrific stock. It is still performing well despite that pullback today. I like that it's holding up above some of these key moving averages. So that looks good. Let me, though, as I mentioned before the break, I like to put some of these in the context of some of the perhaps the overall sector that we're looking at here. So another pharmaceutical that has been a tremendous price leader in recent months, and again, this is from the mid-cap sector. This is Questcor. And this is one I actually held at one point. I don't right now. And this one had, you see, a big run up here that it had. Now, this is just another one of these situations where the stock continued to rally higher and never paused long enough to undercut prior lows. So you're seeing a pullback here, but you're seeing really the same thing. Thus far, it's remaining well above the lows of the previous consolidation. So, this could be frequently you do see, if you have a more volatile kind of correction like this appears to be undergoing right now, that will be enough to flush out some of these traders, investors that really no longer have conviction in the stock and are just ready to move on to something else. And obviously there are quite a few who had owned previously and were taking some profits and were ready to move on. So not any big surprise when you see something like that occurring. Okay, so I want to look at one, and let me see if I can get the chart up here. It's Salix. Let's see here if I can get the ticker right. SLXP. I always think the ticker is something else on that one. SLXP is Salix Pharmaceuticals. Now, this is another one of those. It's sort of it's in the mid cap range right now, but I do want to take a look at it, and you can see how this is another one of these names finding support there along that 10-week moving average. It could be a pretty good indicator, and I like the fact that this is one of these consolidations, like I've been talking about, where they pull back below the low of the prior consolidation. You really did flush out a lot of investors and traders who lacked confidence in the stock, and this is a constructive action too, where it makes some kind of little rally attempt and then pulls back and undercuts the low of the first part of the consolidation. Okay, so you can kind of see where you rallied to, or fell to a low rather, of about 31.29 back here. Then it pulled back a second time to 25.64. So this really is a potentially bullish consolidation. I'm liking the action right now. So you see, despite some of these bigger, well-known names like Merck and Novartis that are showing some weakness, we're seeing some better action in some of the smaller and mid-cap stocks from the same industry. So I understand that we are ready to welcome Gabriel Wisdom onto the show. Gabe, it's so great to be talking with you again today. Welcome to the Small Cap Roundup.
Well, thank you, Kate. I appreciate being with you this morning.
Oh, absolutely. Glad to have you. Now, I know you and I have talked in the past about how you view some of the smaller names in the context of an overall portfolio that would include, for example, some income, because you do advise your clients on this, and I want to get to the fallen angels, but maybe first just give us some context of how an investor, in your view, should see his or her overall portfolio, large caps and small caps.
Well, I think that people need to be aware that the market goes up more often than it goes down. You need to keep that in mind, because playing the odds that you're going to buy at the very bottom or sell at the very top is a loser's game. As Bernard Baruch said many years ago, nobody buys at the bottom or sells at the top. It can't be done except by liars. And
That's good.
He wrote those words almost 100 years ago, and they're very true today. Yet it's amazing how many people think they can do it. So the best you can hope for, I believe, is to buy after a big shakeout, when everybody is complaining about either Greece or or the president or whatever the heck they're worried about, and then sell when everyone's celebrating, which they were. They were celebrating Dow 13,000 as if it was some major landmark. That the Dow has crossed 13,000 9 times since 2007. So, people were celebrating, though, nonetheless, and now we have a sell-off.
That's interesting you bring that up, Gabe, because that is something that I was talking about on the show. We have a chat room for the show, and people were kind of joking about that a little bit. And not to get into predictions, I don't like to do that, but it's absolutely right. It's kind of when you sometimes see some of this exuberance, particularly maybe in some of the mainstream media, it's almost, it just seems like, well, okay, the downturn is going to follow now.
That's right. And I'll tell you what I like as an open-air indicator, probably more than any other indication of where the markets are likely to go, is the Dow theory indicator, where you watch the transportation stocks and how they react relative to the Dow Jones averages of the S&P 500. This was developed by Charles Dow, the man for whom the indexes are named, and of course the great Charles Dow was a man of the sea. He was fascinated with the ebb and flow of tides and waves, and he had the he had the serendipitous idea one day at the beach that maybe the markets work the same way, that they reach these peaks and valleys in a very predictable fashion, and he found that the companies that transport the stuff, the goods that the industrial companies manufacture, were a lead indicator of which way the tide was going to turn. Sure enough, the Dow transports have been trading downward. They've been selling off for the better part of a month now, while the Dow Jones Industrials and the S&P 500 and the NASDAQ too have been climbing, slowly and in a tired fashion, but nonetheless they've been climbing. So that divergence is the best indication that I know of that the tide is about to turn in the markets. Works the other way too. When the transports get ahead of the Dow Industrials or the other broad averages, that's a very reliable buy signal.
It makes a lot of sense, too, because that's an indicator of a number of things, it would seem. It would incorporate business activity, fuel prices, just any number of things would seem to get wrapped up in those Dow transports.
That's right. And this time, just like we've seen in the past, people became sort of swept up in the Dow 13,000 euphoria. I saw a prediction yesterday, Dow 16,000. There's no shortage of people who think the Dow, ought to be at 14,000 by the end of this year. And maybe it will happen. It might. But let the market tell you. And if you're going to be a buyer of great companies when they're cheap, you have to buy them at the right time. The time of the market is very, very important. So the argument for why the transports didn't really matter this time, Kate, was that oil prices had spiked. And the high oil prices had affected the cost of transporting the goods that the industrial companies manufacture. Well, that's true, but it also slows the economy down when oil prices rise. And that's reflected in the earnings of the major companies as well now.
Very interesting perspective. That's a lot to think about there. And I know certainly I've heard the Dow transports having been used as an indicator before, but it's great to point out how even this time around it was right there while everybody was being so euphoric as the Dow was rising. So true. Yeah.
And there's been an early exodus, by the way, in some of the other broad market indices, which I think it's important for people who like to listen to a show like yours and read about financial markets and find that there's a little bit of sport in it too, because it is fascinating and it can be fun, especially if you're winning, to keep an eye on the Russell 2000.
Oh yeah.
Keep an eye on bonds and the metals, gold and oil. And sure enough, the early exodus occurred in the small cap benchmark known as the Russell 2000. It shed about 3% over the past week. And then the Dow transports, as I mentioned, were down about 5%. And that's the economically sensitive, fuel-addicted benchmark, as they say. And then finally, the past week's been pretty rough on gold. Gold's still selling off. Is it a safe haven? Depends on when you buy it. But those three indices were already in a correction of sorts. And so I think now the rest of the market's just rolling over.
Right. You brought up the Russell 2000. That's certainly something as here at the Small Cap Show that I do track. In fact, I was looking at that when I opened the show today. That brings us, though, let's talk a little bit about some of the fallen angels, because I know there are quite a few smaller caps in that portfolio. Say a little bit about that, Gabe, and maybe we have about 4 minutes. Give us a couple names, if you can, real quickly.
Sure. The small fallen angels is an old Wall Street term to define companies that have fallen but should be rising, or maybe they've just fallen and used to be very popular and successful, but they've fallen. In our view, A great fallen angel is one that's fallen in price, but intrinsically it's rising. So the financials are solid, everything's getting better, or it's about to get better, and yet the price wouldn't reflect the better times ahead. So that's a great fallen angel opportunity, and they come in all sizes, not just small cap, but mid cap, large cap, mega cap. Everything eventually goes on sale if you're patient. The Fallen Angels focus stock for this week that Mike Moore and I discovered, and we reported these things in our newsletter called the Fallen Angels Report, and your listeners are certainly welcome to try the Fallen Angels Report. Just go to fallenangelsreport.com, and it's free to get yourself started. We don't share anybody's name or email address.
Great.
It's very confidential, and we get the latest report. You get the one I'm talking about right now, about the impending stock shortage that's driving shares higher. And the best performers were the worst performers in 2011, those stocks that were most widely shunned, like Sears Holdings, Bank of America, Netflix. I mean, these companies have gained well over 50% in the new year. One that we like right now is BMC Software. Symbol's BMC. It's an enterprise software company that serves the large IT infrastructure needs of large companies around the world. It's been around a long time, and the stock's down about 35% from last year's high. And we think that in the mid-30s, you could pick this up, and our target 12 months is 50, which is a nice return. That's a high-quality fallen angel. The more speculative plays in Fallen Angels are something like Sirius satellite, Sirius XM radio. That's a company that's never been able to make any money, yet the revenue's been growing. Warren Buffett bought some Sirius XM through his Liberty Media acquisition recently. Liberty owns about 40% of the Sirius XM stock outstanding, and I think it's under $3 a share. That's a pretty decent play on a company that clearly isn't going out of business.
And the chart action actually is a pretty stark contrast to the one you just showed us. Talk about that, how some of these are pretty beaten down, but this one's actually showing some pretty good chart strength, Gabe.
You're talking about Sirius XM?
Yes.
Yeah, it's got good chart action. It's cheap and timely. It's no longer a dog. I would call it a cat. A cat is an acronym. CAT is cheap and timely.
Okay.
Cats are smarter than dogs, cheap and timely securities, because they have the wind at their backs. So we favor the cats over the dogs. Dogs sometimes can, they can develop all kinds of problems. They're down for a reason that everybody seems to know about, and it's more of a turnaround play. I know everyone has heard about the dogs of the Dow or the Dow underdogs, and I think that could be a great strategy. But the problem with that strategy is as soon as it doesn't work, people flip-flop over to something else, and they miss it when it does work.
Right.
So I think if you focus on cats, and I write about that in my book from Wiley, I think you have better luck because you've already got some institutional interest. And Kate, as you know, it takes institutions months to fill a position oftentimes.
Yes, that's right. I talk about that quite a bit. Well, Gabe, I can't believe it. That's our time here. It's wrapped up so quickly. So glad to have you. Definitely have you back. Always great to talk to you. Thank you so much for joining us. Gabriel Wisdom.
Thank you.
All right. So stick around. We've got our last segment of the Small Cap Roundup coming up right after this break.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back. I'm Kate Stalter. This is our final segment today of the Small Cap Roundup. And looks like I will be back later on today in the 5 o'clock hour of the Tom O'Brien Show, sitting in for Tom this afternoon, which is always fun. I got the privilege of doing that last week, and I'm very honored that Tom asks me to do that, so that's just fabulous. I'll be back on later today, so be sure to listen then. Great conversation we just had with Gabriel Wisdom, and that kind of really brought home the point of what I was saying before he got on the line, which is that there's a lot we can learn from investors and traders who are buying at lower prices before I would get into a stock. I mean, you heard him say right there when we were talking about, let me put the Sirius chart back up. When we were talking about the technical strength here in the Sirius chart, that it is the institutional buying that pushes the stocks higher. And it is guys like Gabe and others who are able and willing to get in there at the lower prices and perhaps sit through some consolidations that a lot of individual investors, maybe we don't need to do that, but these guys are doing us a tremendous service by coming in there at these lower prices and beginning to send the stocks trending higher. So it's just terrific to get their perspective, and that was, if you were listening at the beginning of the show, that's some of the fundamental analysis that I was talking about. They know these companies very, very well. They know the strengths. They know the weaknesses. We can definitely benefit from their wisdom, so to speak. So I want to thank Gabe for that point of view. I want to also, let me see here. We've got a couple minutes here. I want to revisit a stock that our guest last week was talking about, and this is Americo, UHAL. If you were listening, I think it was Thursday's show, we had David James from the James Small Cap Fund. He was talking about this. The ticker is UHAL, U-Haul. And, of course, as the name suggests, this company operates the U-Haul service, truck and trailer rentals, storage rooms, all that stuff you buy when you're moving and you're doing a lot of it yourself. Now, what's interesting about this one is funny because David was talking about this on the show last week. I had really not been tracking this stock. I wasn't really even aware of it particularly. But lo and behold, I ran some scans yesterday, just some of the same ones I normally run here on the Telechart 2000 program that you see. And U-Haul turned up on that scan. Now, what's interesting about this, it has been pulling back, but there's one of the things that I like to see is that support right there at the 10-week average. And you see it's had a nice trend higher emerging from that consolidation, pulled back, found support right there. This has a market cap of about $2 billion, so right on that edge where I consider between small cap and mid cap. Now, a lot of the fund managers, by the way, do consider maybe more up to the $3 billion range as being small cap. So that's something that's a little more consistent with the S&P 600, for example. But nonetheless, regardless of which number you use, this is showing some good technicals right here. We've got some pretty good earnings estimates on this, showing you some of the confidence that the institutions have at this time. Good track record of fundamentals. I talked about that early on. That's not the be-all and end-all in a stock, but it does show you that the company is capable of managing itself to revenue growth, that there's demand for the product, demand for the service, and the current management is able to figure out how to get some earnings out of that. So this is one like that support, and I'm going to be continuing to watch this particular stock because it could offer another buy point soon. Okay, there's our music. We are out of here. I'm Kate Stalter. This is the Small Cap Roundup, and I will be back later on this afternoon, 5 p.m. Eastern. Give a listen. Bye-bye.